Hello viewers, welcome to my channel. Hashim Ali Khan here. So far I have completed 18 problems on non-profit organization, accounts of non-profit organizations. Now I am going to start the 19th problem in this video. So if you join first time right now, you may not be able to understand it. So I suggest you to watch from beginning. If you watch from beginning, then only you can be able to know what is the meaning of these non-profit organizations. What are the final accounts of these non-profit organizations? So if you are first time watching my video now, I suggest you to go to the playlist of my channel. Select the subject Financial Accounting 2. Select the topic of the video, accounts of non-profit organizations. Watch the first video, you can be able to completely know what is the meaning of non-profit organization. What are the differences between trading concern and non-trading concern? And what are the final accounts of non-profit organization consisting of receipts and payments account, income and expenditure account and balance sheet, all these things. And the terms which are normally used in non-profit organization like subscriptions, donations, entrance fees, legacies, all these things I have explained in the first video. So without following that video, without watching that video, you may not be able to understand now. So now I am going to start the next problem, that is problem number 19. So before starting the problem, I expect my viewers to have a printout of the problems which are given in the link under my description. So take a printout, keep it ready and start watching the problem. 19th problem I am reading out. The following is the receipts and payments account of healthcare hospital for the year ended 31st March 2009. So we are given a receipts and payments account. So left hand side receipts, right hand side all payments. It is for the year ended 31st March 2009, you remember. Receipt side, to balance brought down 560. This is the opening balance of cash. Then subscription received during the year 4,560. Donations received 1,160. And charity show proceeds received is 800. These are the receipts by the organization. Now payments are paid for medicines, 2,400. Then salaries paid, sundry expenses, equipment. And a payment made for equipment is a capital expenditure. This payment made for equipment, that will not come in income and expenditure account, that will go to balance sheet because equipment is an asset. Next, charity show, it's a revenue expenditure. Honorarium, it's a revenue expenditure. Now closing balance of cash is 360. This closing balance of cash will go to balance sheet asset side. So receipts and payments account I have explained. Now come to additional information. As on 1st April 2008, as on 31st March 2009. 1st April 2008 means beginning of the year. 31st March 2009, end of the year. So we are given the values, items at the beginning and at the end. Subscriptions due. Due means outstanding. Outstanding subscription, beginning of the year 100, end of the year 200. You already know how to treat the outstanding. Subscription received. To subscription received, add outstanding at the end of the year and deduct outstanding at the beginning of the year. Every problem we are doing the same way. So you can see here on the screen, income side. Income side, you can see subscription received 4,560. It is given in receipts and payments account. Debit side, you can see 4,560 subscription received. To this, add outstanding subscription end of the year 200. Then minus outstanding subscription beginning of the year 100. So always current year outstanding we add, last year outstanding we subtract. Similarly, stock of medicines. Medicines payment, how much is given on the payment side? You can see paid for medicine 2,400. 2,400. Now stock of medicines were there in the beginning and the stock of medicines at the end. See here, stock of medicines at the beginning of the year will be consumed during the year. And stock of medicines at the end of the year are those medicines which are purchased but not consumed. Stock means the items which are not consumed. So here stock of medicines at the beginning of the year will be added and stock of medicines at the end of the year will be deducted because it is not consumed. So on expenditure side, you can see medicines purchased are 2,400. To this we add opening stock of medicines 800. Then deduct closing stock of medicines. That is the new point in this problem. Next page you see value of equipment. Actually, equipment value at the beginning of the year is 1600 and end of the year is 2100. And how much equipment purchased during the year? On payment side it is given. On payment side, equipment purchased 1200. So beginning of the year 1600. During the year 1200 more purchased. So 1600 plus 1200, 2800. So instead of 2800, at the end of the year we are having 2100. So actually it should be 2800, but it is given 2100 at the end of the year. What had happened to the remaining 700? That is a depreciation on equipment. So here on expenditure side, last you can see equipment. Beginning of the year we were having 1600 equipment. During the year equipment purchased 1200. If you add up these two, it will be 2800. End of the year value is 2100. So 2800 minus 2100, 700 rupees is the depreciation on equipment. That's all. Value of building. Now see, a value of building at the beginning of the year 8000. End of the year it has come down to 7200. That means 800 rupees value of building have decreased. This decrease is assumed on account of depreciation. Actually, when asset decreases, there may be two reasons. The first reason is there may be sale of asset, due to which the asset value will decrease. Secondly, depreciation. On account of depreciation, the asset value might have decreased. Here nothing is given regarding sale. So we assume the decrease in the value of building is on account of depreciation. So here we have taken depreciation 8000 minus 7200, 800 rupees is the depreciation of building. Then donations are to be capitalized. The receipt side donations are given, that is how much? 1160. So it is specifically asking you to treat donation as capitalized item. So take it to the balance sheet. Don't take donation in the income statement. Prepare income and expenditure account for the year ended 31st March 2009 and show the balance sheet as on that date. So we are required to make the income and expenditure account and balance sheet. But before that, capital fund at the beginning of the year is not given. So without finding the capital fund at the beginning of the year, we cannot prepare the balance sheet at the end of the year. So first of all, we'll make the opening balance sheet. So here you can see healthcare hospital balance sheet as on 1st April 2008 opening, right? Now asset side, cash in hand, receipts and payments account, first item to balance brought down. Receipts and payments account, first item debits left hand side to balance brought down 560 rupees. That is the cash in hand at the beginning of the year. So cash in hand 560. Outstanding subscription. Now additional information is given in that subscription due, means subscription outstanding. At the beginning of the year 100 rupees. So I have taken outstanding subscription 100. Stock of medicines. Stock of medicines beginning of the year 800 rupees given. So I have taken 800 rupees. Equipment beginning of the year 1600 rupees given. Equipment 1600. Building beginning of the year 8000 I have taken. All the values at the beginning of the year is given. So I will take the total of the asset side 11,060. There is no liability at all at the beginning of the year. No liabilities. So 11,060 is the balancing figure and that is the capital fund at the beginning of the year. That's it. So we got capital fund. Now easily we can make the balance sheet at the end of the year. Before that, income and expenditure account. Income and expenditure account for the year ended 31st March 2009. Now, receipt, income. Receipts, we take it to the income side and payments, we take it to the expenditure. So first of all, receipt side you see. So by subscription received 4,560 given on the receipt side of the receipts and payments account. To this, you have to add outstanding subscription at the end of the year minus outstanding subscription at the beginning of the year. So end of the year subscription outstanding are 200. 200 rupees are the subscription outstanding at the end of the year. This will come twice. First we have added here. Then again 200 rupees outstanding subscription will be taken on the asset side of the balance sheet. So here you can see 200 rupees outstanding subscription. Now beginning of the year outstanding subscription 100 rupees, deduct. As usual, every problem we are doing, deduct 4,660 is the subscription. Now charity show. On receipt side you can see the item charity show proceeds, receipts, that is the revenue income. That's all. Only two items are there. Only two items. Because the remaining items are, see here, receipt side you can see two balance brought down, two subscriptions. We have taken subscription. Donation, specifically given that donation should be capitalized, means we have to take it to the balance sheet. Don't take. Charity show, we have taken. Now payment side. Payment side, first item, payment of medicines. Just now I told you, stock of medicine beginning of the year is there, that will be added, and stock of medicines end of the year, that will be deducted, because end of the year means medicines purchased but not consumed. It will be consumed in the next year. So these medicines should be deducted. The closing stock should be deducted. Opening stock medicines are there and it is assumed it is consumed during the year. So opening stock will be added. The purchase of medicines 2,400, add opening stock of medicines minus closing stock of medicines. Apart from that, payment side you can see salaries paid, sundry expenses paid, charity show expenses paid, honorarium paid. All these are the payments given, all are revenue payments. So we'll take it here. Now depreciation. If you compare the building value, beginning of the year 8,000, end of the year 7,200, decrease by 800. So we assume that is a depreciation. Similarly, equipment. Beginning of the year equipment 1,600 and during the year equipment purchased 1,200. So 1,600 plus 1,200, 2,800. But end of the year equipment is given 2,100 in the problem. Then what happened to the 700 rupees? That is a depreciation. So equipment 1,600 plus 1,200 minus 2,100, 700 rupees is a depreciation. Over. Now take the total of the expenditure side, 7,220. In this problem, expenditure is more than income. So after taking down all the items on a separate paper, you find out the total of debit side and total of credit side. Total of expenditure and total of income separately. Sometimes income will be more, sometimes expenditure will be more. In this problem, expenditure is more. The total of expenditure 7,220. From 7,220, deduct minus 4,660 minus 800. The balancing figure you are going to get 1,760. This is the balancing figure, it is the deficit. What do you mean by deficit? Excess of expenditure over income. Excess of expenditure over income, 1,760. That's all. This deficit will be deducted from capital fund in the balance sheet. Over. Now I am coming to the balance sheet. Liability side, donations. Specifically given in the problem, donations should be capitalized. That's why from receipt side, I have taken the donations to liability side. Capital fund, beginning of the year, just now I have calculated 11,060 opening balance sheet. That 11,060, from that deduct the deficit. Deficit 1,760 deducted 9,300. Over. Liability side completed. Now I am coming to the asset side. Asset side, cash in hand. Receipts and payments account, last item right hand side, by balance carried down. Closing balance of cash, 360. Outstanding subscription stock of medicine specifically given in the problem. Outstanding subscription at the end of the year 200. Stock of medicines at the end of the year 600. Now equipment. Equipment beginning of the year 1,600. During the year equipment purchased, that is given on the payment side, 1,200. So 1,600 plus 1,200, 2,800 minus how much depreciation provided during the year, 700. On equipment, 700 rupees depreciation provided, minus 700. So 2,100 is the value of equipment end of the year. Similarly, building. Building value beginning of the year was 8,000. During the year, depreciation provided 800. Deduct 800, you will get 7,200. Balance sheet is static, 10,460. That's all. So this is the end of problem number 19. Come on, now we'll start the next problem. Problem number 20. Hyderabad Sports Club prepared the following receipts and payments account for the year ended 31st March 2009. So our year ends on 31st March 2009. So receipts side, you see left hand side, opening balance 3,180. Then subscription received during the year 18,000. Sale of old newspapers, interest received and receipts on sports. All the three are revenue incomes. All the three are revenue incomes. So it will be taken on income and expenditure account credit side. All the items. Subscription, sale of old newspapers, interest received and receipts on sports. All are revenue incomes. So all the four will be taken credit side. Now payment side, you see salaries to staff, it's a revenue expenditure. We will take it on expenditure side. Then printing and stationery, postage, rates and taxes, upkeep of land, expenses on sports, other expenses. That means all the payments are revenue payments, revenue expenditure. So all the payments will be taken on the expenditure side. Now closing balance of cash 3,000, that will be taken on the cash in hand assets side of the balance sheet. That's it. The receipts and payments account, all the items I have explained. Now additional information. As on 31st March 2008 and 31st March 2009, the last year and current year, both the values are given. Subscription in arrears. Subscription in arrears means subscription outstanding, subscriptions due. So already we know, even in the last problem also we have done the same thing. Outstanding subscription at the end of the current year will be added and outstanding subscription at the beginning of the year will be deducted as usual. So end of the year 1,000. So 1,000 will be added and beginning of the year 2,000, that will be deducted. That's it. Now new point is subscription received in advance. It is opposite to outstanding. Outstanding means due but not received. But subscription received in advance means already we have received but it is not due. It is not due. So we have to do it opposite. Subscription received in advance last year will be added and subscription received in advance at the end of current year will be deducted. So last year received in advance how much? 500. The last year's received in advance 500 will be added to subscription and current year we have received in advance, that is 800, that will be deducted. This point you have to remember. So normally students will commit the mistake on this point regarding subscription. So you should be clear in mind which to be added and which to be deducted. Outstanding subscription end of the current year will be added. Outstanding subscription end of the last year will be deducted. The opposite rule will apply to received in advance. The subscription received in advance last year will be added for this year. And current year, whatever subscription we have received in advance, that will be deducted because it is not current year's income. That's it. That is the only new point in this problem. Furniture last year 2000, current year 1800. Furniture value have decreased. I told you the decrease in asset may be on account of two reasons. It may be on account of sale or it may be on account of depreciation. If sale information is not given, we assume there is depreciation on furniture. So 2000 minus 1800, 200 rupees depreciation. Land value last year 10,000, current year 10,000, no change. Investment last year 1 lakh, current year 1 lakh, no change. Prepare income and expenditure account and balance sheet for the above period. Very easy problem. Only the thing is you should be careful regarding subscription. As usual, the opening capital fund is not given. So we have to find out the opening capital fund by preparing opening balance sheet. So we make the balance sheet as on 1st April 2008. 31st March 2008 or 1st April 2008. So opening balance sheet. So we first of all will take the asset side. Asset side, cash in hand. See the receipts and payments account, left hand side to balance brought down. Opening balance of cash is 3,180. So I have taken 3,180 cash in hand. Similarly, additional information you come, subscription in arrear means outstanding subscription last year 2000. So outstanding subscription last year 2000. Now next one, subscription received in advance. It's a liability. Outstanding subscription is an asset and subscription received in advance is a liability. So last year how much is a subscription received in advance? 500. So 500 I have taken, subscription received in advance 500. Next comes furniture. Last year furniture 2000, furniture is an asset. Then land, last year land 10,000, 10,000. Investments last year 1 lakh, I have taken 1 lakh. So last year's assets and last year liability. Take the total of assets 1,17,180. From 1,17,180 deduct 500 rupees capital fund balancing figure 1,16,680. That's what. So capital fund is not given in the problem. So we have prepared the opening balance sheet to find out the capital fund. Without this capital fund, we cannot complete the current year's balance sheet. That's it. Now I am coming to income and expenditure account. While making this income and expenditure account, we take current year's income and current year's expenditure. Only revenue incomes and revenue expenditure. So first of all, income side. Subscription received is given 18,000. 18,000 subscription received. To this we have to add outstanding and received in advance. Outstanding subscription at the end of the year is 1,000. So 1,000 outstanding subscription, current year 1,000, add up. Then outstanding subscription beginning of the year 2,000, deduct 2,000 minus outstanding subscription last year 2,000, deduct. Similarly, subscription received in advance last year will be added. How much is the last year subscription received in advance? 500. That means this 500 belongs to current year. But we have received it in the last year itself. So we have to add back because it is current year's income. So add subscription received in advance last year 500 we have added. Similarly, subscription received in advance current year. Current year we have received in advance which relates to the next year. So it is not current year's income. We deduct minus 800. 16,700 is the subscription income of the current year. Apart from subscription, the other revenue incomes are sale of newspapers, sale of old newspaper 6,500, interest received 22,000, receipts on sports 9,020. So we have seen all the receipts side that I have taken on the income. Now payments will take it on the expenditure. Salary to staff, directly I have taken salary to staff, no adjustment, nothing. Printing and stationery, postage, rates and taxes. Printing and stationery, postage, rates and taxes, upkeep of land. Then other expenses on sports. Upkeep of land, expenses on sports. Then other expenses 3,480. Other expenses 3,480. Now lastly, depreciation on furniture. Last year furniture 2,000, current year 1,800. So 200 rupees depreciation over. All the items of receipts and payments I have taken in income and expenditure account. Now you have to check separately the total of expenditure and total of income. On a separate piece of paper, you find the total of expenditure and total of incomes. In this problem, what you will find is the expenditure is more. This expenditure total is more than income. The expenditure total, it comes to 55,900. Expenditure total. From that you deduct the incomes. You deduct the incomes. What are the incomes? 16,700. So 55,900 minus 16,700 minus 6,500 minus 22,000 minus 9,020. The balancing figure you are going to get 1,680. What is this balancing figure? Deficit, loss, excess of expenditure over income. Excess of expenditure over income, that is called deficit. So the purpose of making this income and expenditure account is to find out the surplus or deficit. we got this deficit. This will be deducted from capital fund. Now come to balance sheet. Liability side, subscription received in advance, just like the beginning of the year. In the beginning of the year, we were having subscription received in advance. End of the year also we have subscription received in advance. How much? 800 rupees. You can see the problem. Now capital fund, beginning of the year already we got it 1,16,680. From 1,16,680 deduct the deficit, 1680 deduct 1,15,000 is the capital fund at the end of the year. Or liability side completed. Now I am coming to asset side, cash in hand. In the receipts and payments account, right hand side, closing balance of cash, you can see 3,000. Closing balance, it is given, closing balance 3,000. So that is the closing cash in hand. Outstanding subscription, see the problem, additional information. Outstanding subscription, end of the year 1,000. Furniture, beginning of the year was 2,000 and during the year depreciation provided 200. So 2,000 minus 200, 1,800 is the value of furniture. Land and investment value, no change at all. Whatever land and investment were there at the beginning of the year, same land and building and land and investment value is there at the end of the year. No change. So balance sheet tallied 1,15,800. So this is the end of problem number 20. Totally 20 problems I have explained you in so much of detail regarding these non-profit organizations. Each and every point I have explained in detail. So if you think that these videos are increasing your knowledge, if you are satisfied, if you are happy with my lecture, give a like to the video. Share my channel in your group, in your friend circle so that more students can watch the video and enhance the knowledge. And give your comments on these videos. And lastly, don't forget to subscribe my channel. Inshallah, I'll continue the next problem in the next video.